welcome to Moneylife. This time we are talking about a new angle to the Anugrah issue. Last week I talked about how this brokerage firm, which hardly anyone heard about, had over 1,000 crores raised from a bunch of small investors, not very small. Some of them had put crores of rupees. One family has 150 crores, so not really small. But they raised 1,000 crores through three entities. One was Anugrah itself, which was offering assured returns. I have the documents to show it. They had another associate called Teji Mandi Analytics, which said it's going to do some foolproof derivatives trading and give people fancy returns. So the returns, in fact, I noticed from some of the papers submitted is they were as high as 40% in 2014-15, and they have been at least as much as 14 to 15%. 19% in some years. So people have blindly been giving money. So I'm starting with the caveat that I'm not for a moment holding a brief for people who rush to give money to what were eventually what looked like Ponzi schemes, and without checking enough about whether these so-called derivative advisory services that were being run by them were even kosher. But what I want to talk about this time is how stock exchanges, clearing corporations, clearing brokers and banks who collude with these dubious brokers, who allow them to pretend that everything is fine for years together, are getting away with it. So who pays the price? Disparate investors spread across the country, hundreds and thousands of them, losing big chunks of money for an individual, but too small to be able to tackle the legal system, to look at the slow process of litigation. It's also very expensive, multiple appeals. So who wins all the time? It is the people who have written laws in a way where they are not accountable, and the system protects them because they are the system, they have written the rules, and they get away with it every single time. Now, when I say every single time, when a dozen brokers have defaulted, the pattern is similar, that you're misusing shares and mutual funds and cash kept with you. You are pledging them, you're taking speculative positions on that basis, you lose that money, but who pays the price? Yeah, sure, the broker defaults, the investors lose, but nothing happens to the clearing corporation, which hasn't done its job. Nothing happens to clearing brokers and banks, where increasingly we have evidence that they definitely knew. I'm not going to use the word colluded, but they should have raised red flags, and in some cases, yes, they may have colluded with them. Now, let's look at Anugrah, and I'm going to talk about what we have learned so far. In fact, me saying that they get away is not just about what I as a journalist am saying. We organized a webinar where we invited two speakers, Advocate PR Ramesh and Sumit Agarwal, both of who have spent long years in SEBI, including in the SEBI legal department. They know how the rules are made and how it functions. So Advocate Ramesh, who has 2 decades of experience with capital markets, in fact pointed out that whether it's Anugrah, Karvi, Allied, or all those who have failed in the last 2 years, nothing is done beyond saying that there was naive investing, and what is not looked at is the large element of fraud. So he says the fraud part never deserves this attention, and he urged Anugrah investors, go to the court, take up the issue of fraud, and ask the court to issue orders that will investigate everything that's going on and the role of each player, and what are the red flags that they should have seen and they ignored, or whether there was collusion. Why do we make this point? Well, he said that it is true that investors fell for the promise of high returns, but that's only part of the problem. They may be willing to bear those losses, but what about outright fraud and criminal offenses? Should we ask for them to be investigated? I think absolutely they need to be investigated. The point that is being made here is there are market monitoring mechanisms. SEBI has a highly sophisticated system which we keep talking about every time. Clearing corporation frames rules. So what does the clearing corporation do? It says that there will never be a default at the clearing corporation level, even if it means selling off anybody's shares. So the corporation is never at a loss. The clearing corporation, in the case of NSE, is a part of the NSE group. Below the clearing corporation are clearing brokers. These are large brokers whose duty it is to facilitate a settlement, There are smaller brokers like Anugrah who operate through a number of large brokers who are clearing brokers. Have they been doing their job? Now, let's take a look at some of the things that I'm going to point out in the context of what has happened recently. So, clearing brokers are best protected because they are empowered to order the auction of shares, invoke margins in the form of guarantees, fixed deposits, and protect themselves. And they protect the clearinghouse and they protect the settlement. All very well. But what if they are not doing their job as well as they should? So we are looking at, in the context of Anugrah, there have been allegations that Edelweiss Custodial Services had sold shares, not invoked bank guarantee, and caused losses. This happened before June. We've been following up with Edelweiss for their part of, their say in what happened. We've been getting some answers. Most of them are off the record and not to be quoted. So we'll say a spokesperson has told us a few things. So Edelweiss insisted that it has done its job. Anugrah was overtrading. It has had several occasions when it had warned it, and finally in early June terminated the brokerage relationship with the brokerage house. Turns out that it wasn't really early June, it was 20th July when Anugrah moved from Edelweiss to ICICI Bank. There are surprisingly no complaints about ICICI Bank, it's only about Edelweiss. One of the other things that came up is an allegation that there was a bank guarantee which should have been invoked first if the broker failed to pay up, but they did not do that. When I engaged with Edelweiss, one of the WhatsApp messages I got from the spokesperson indicated that there may have been a deficient bank guarantee. This is news to me. We don't know what it means. If there is a deficient bank guarantee, how does it escape scrutiny at the bank level, at the clearing broker level, and at the clearing corporation level? This is what we're going to come back, because remember, this is not the first time. Edelweiss itself was involved in another brokerage firm which went belly up one fine day after 14 years in business. It was India Nivesh, and the only loss over there, fortunately, was not investors but Edelweiss itself, because there was apparently a fixed deposit and HDFC Bank had the fixed deposit which refused to pay. Now, we hear that that was also, to use their word, maybe deficient, and even worse, it was funded, which means that there was no fixed deposit. There was a short-term loan which masqueraded as a fixed deposit. The bank knew it. The clearing broker possibly knew it. We don't know, because it's all gone into arbitration. Neither the bank nor Edelweiss is talking about it. NSE and the clearing corporation never talk. Are they investigating? We don't know, right? So it's happened in India Nivesh. Similar allegations in Anugrah. Now, we hear from Advocate Hegde that this has happened in another company called V-Rise Securities. So, 3 times, hat-trick by Edelweiss is ground for suspicion, because why would the same clearing member figure over and over again with similar allegations? Now, there's, like I said, the allegations are very clear. We have a copy of an email from Mr. Arun Gandhi, founder of Teji Mandi Analytics, which was an associate of Anugrah, where he openly alleges that the clearing member made unnecessary and wrongful deductions from some accounts, right? So, very clearly, 3 times. Now, let me look at V-Rise Securities, because that's an interesting one, and that has gone in. That's gone before the Securities Appellate Tribunal and is being argued over there. So, what does it say? So, in V-Rise, the allegation is that Edelweiss allowed brokers to intermingle collateral provided by clients, and that which was required from the broker for proprietary trading. When the broker incurred losses in proprietary trades, client collateral was sold by the clearing member, knowing fully well that the shares belong to investors. A similar allegation is now being made in the Anugrah case as well. So, Advocate Hegde, who's taken this up before SAT, points out that the clearing corporation regulations are explicit that the clearing member cannot make improper use of client securities and funds. More importantly, the regulations say, and he quotes, "No clearing member shall exercise any discretionary powers in a client's account unless the client has given prior written authorization." None of these people whose shares were sold have given prior authorization. It was all part of a pool. Yes, they did. Not everybody was part of this derivatives advisory, but they were part of that. That meant the legality of that derivatives advisory itself is unknown. So Edelweiss should have been treated as, had treated Anugrah as this one large broker and what it was doing with client shares. Did it do it? We don't know. Now we come to the role of banks as lenders. I've already talked about what happened with Karvy. Karvy was the first. Karvy owes money to about 7,000-8,000 investors. I'm pursuing that separately. Some of them are continuing to get money even in the last couple of days. But large chunks of money is not paid. Now, what happened with Karvy was 4 organizations who ought to have known better, ICICI Bank, HDFC Bank, IndusInd Bank, and Bajaj Finance, lent money against a pool of securities. Should they have done the due diligence of finding out whether the people in the pool, the investors whose securities they were, knew that those shares are being pledged? They don't seem to have done it. They were happy to lend against a bunch of shares that belonged to investors. Luckily, in that case, SEBI did the right thing. There were 90,000 investors affected. In 83,000 cases, SEBI ordered the National Depository to transfer the shares back. So for once, the big guys who can employ big lawyers, spend a lot of money on courts, have to fight it out themselves. They are. So they are fighting Karvy. Another 7,000 people are still waiting for almost 1 year for their shares. And like I said, I'm trying to help them out. So you have Karvy, you have India Nivesh, where we talked about the funded FDs. You now have Anugrah, where there is talk about a deficient bank guarantee. So one of the allegations about Anugrah is not just that its investors' money, its investors' shares were sold by the clearing broker, but also that it did fail to invoke a bank guarantee that existed. So the bank guarantee or the fixed deposit should have been invoked first, and then shares sold to meet the settlement requirements. Like I said, when I was engaging with their spokesperson, there was talk about we may not have done it because it may have been deficient. Now, who's going to investigate whether there was a deficient bank guarantee? Clearing Corporation, NSE, SEBI. What are they doing so far? Silence, right? How do you get them to answer? How do you get them to investigate? How do you get them to give answers to investors? Only by going to court. If Anugrah investors are smart enough to get together as a bunch and go to court, they may be able to do something different if they're able to push. Now, HDFC refused to honor a funded FD. That matter is in court. Karvy, HDFC also involved, 3 others, the matter is in court. There's another case called BMA Wealth where HDFC Bank again refused to return investors' shares. The bank in fact has written to investors that it's well within its legal rights to sell pledged shares which the broker has pledged under loan agreements. It further claimed that BMA had expressly represented that it owned the shares. Nobody bothers to check. I mean, these shares will be in the name of individuals. It could have been checked from the depositories. But no, HDFC says this. It will go to court. It has threatened to take all steps to protect its interest, which in India means that I will go to court, I will fight out at the High Court single judge bench, then I'll go to a division bench, then I'll go to the Supreme Court. No small investor is going to be able to fight it unless as a group. Like I've said before, it's like the law of the jungle operates in the capital market rather than regulation and supervision. The regulator is never held accountable, so innumerable failures over 2 years. Nobody asks them, what is this fantastic system that you have? The biggest intermediaries, and when I say intermediaries, I mean first line of regulator, NSE, NSE's Clearing Corporation, as well as clearing brokers, hire extremely expensive lawyers and drag the thing through multiple levels of litigation. Until our regulators and intermediaries, the large ones, are held accountable, nothing's going to change. So investors are angry, they want to hold dharnas, they want Twitter storms. Nothing's going to work like a court case. Get together, go and find a lawyer who's ready to take on the regulator. Biggest business provided to law firms are by exchanges and these large intermediaries. If you're getting someone who's willing to challenge them, take advantage of it and fight it out. There has to be a first time, there has to be a precedent. Let's see if Anugrah is the case where it happens. Thank you.